Alright guys, Gen Z Raisho here, and today we got a portfolio update video. We are also updating you guys on my spreadsheets because spreadsheets aren't the funnest, but they do track our total return, which is very critical. If you're investing into YieldMax, especially if you are using margin, then you need to have spreadsheets so you can track your total return and whatnot. You can't invest into these with just the set it and forget it mentality. You need to be very strategic with your planning and execution. So currently $123,000 in portfolio value, and if we look at our margin, buying power is $35,000. You guys remember I was talking about Oracle before, and essentially I followed his margin buffer guide, which you can see according to Oracle at least we are doing good with margin in the sense of our margin available being at $35,000 is less than our margin buffer, meaning we can max out the amount of margin they give us without going over our buffer. So according to that stance, we're doing very good. Now if you want to do math real quick, then margin 89,500, so this divided by $123,000 in value, we are 72% leverage as I state inside the title, so that's not clickbait. But nonetheless, the goal is still to get to about 90% leverage in this account. 72% leverage is a lot, but the plan is to go up 20% more in leverage, so we're not at the craziest point yet. High risk and high reward. Hopefully I don't find out, guys, and if you follow my journey, then you're gonna find out if I found out. The market has been fluctuating a lot due to just, a lot of data coming out, unemployment and whatnot. On the 1 month chart, we hit a high of $137,000, as you can see, although sadly it fell so quickly. With these really, I guess, riskier funds, they can go up really fast and drop really fast. Although this isn't due to the fund, this is due to the whole stock market as a whole. We can look at VOO real quick, and it's starting to downtrend. It was at a 555 all-time high, and currently it's at $533. Unfortunately, we didn't spend our life savings and all of the margin at the all-time low, which some of these funds are. Like, we can look at, let's say, YieldMax, for example. If you look at that 1 year chart, we're pretty much at the all-time low, right? So sadly, we bought somewhere up here. Unfortunately, we didn't buy somewhere down there, but I guess you can't time the market. Hopefully YieldMax and the other ETFs bounce back. They do say that when things come down, they do go back up. Although we do not know about these income funds because you gotta factor in NAV erosion also. But to be clear, this recent downturn is not due to NAV erosion. From this point to this point, yes, you can say it's NAV erosion. It's gone down in price. But I want you guys to specifically look at the date of, let's say, August the 1st and September the 1st, right? You can see it goes down, but it's a V-shaped recovery. We can look at VOO and what happens on August the 1st, September the 1st, it goes down, and also V-shaped recovery. So the whole stock market is moving down currently, so we can't attribute this current downturn in YieldMax to NAV erosion. Hopefully once the S&P 500 starts going up also, that it follows with the V-shaped recovery also and goes upwards in price. And also, to be clear, if you guys are new to watching this, YMX specifically started doing better in September because this is when they went weekly. Previously, from this point, they were pretty much paying monthly, and there was NAV erosion because they couldn't bring the share price back up. After September happens, they went to paying weekly and they were able to stabilize the NAV. And as you can see, it starts trading flat. It goes down, it goes up, starts trading flat again until Jerome Powell happens. The Jerome Powell incident happened and we started going down, and now the whole S&P 500 is still also going down. Also factor in next week, it might be bloody also in the stock market because next week you got the CPI inflation data, I believe. And if it shows that inflation is going up, then it's going to mean that they are likely not going to be cutting rates this year, which would hurt the stock market even more. Alright, so now we can go to our spreadsheet, and this will be our main spreadsheet screen. We will try to put everything on this screen right here, so this is like my main page. You guys already know that this right here is my initial investment, $117,000, 22 months to break even. We came at the philosophy of if we use a lot of margin, then we are able to cut this 22-month break even time into 11 months. And well, according to the amount of margin we are using and according to our other investments, it'll take 11 months to break even. less than a year. This does not include redistributions, so this is very good. As you guys know, this is my total income fund that's all on one spreadsheet right here. It's generating $2,500 per week or $10,000 per month. And again, this is very crazy because I recently realized that this is more than how much I make at my 9-to-5 job. Current distributions paid is $5,100. We are 4.42% towards breaking even on our $117,000 investment. This chart right here is for YieldMax schedules only, so we can estimate that on the Tesla Schedule A distribution week that we are going to get $1,800. Schedule B's week with NVIDIA, we will get $1,900, and so on. But from YieldMax alone, we're getting $10,000 out of the $10,200 from our portfolio. So it's just very interesting data to keep in mind. You guys see this chart right here, and it says cute stocks, and you see cute stocks right here pretty much, and we already bought some of the stocks in this chart. And once we spend all $18,000 plus whatever we bought already, it should generate another $904 per month in income. You guys remember we said that our margin currently is at 72%, right? We're spending $89,000 from Robinhood. We plan to bring this to 90% margin. And if we bring it to 90% margin, we need to spend another $18,000, and that's where this chart comes into play. Meaning we plan to buy about 225 more shares of YMAG, msty 185, ymax 275, and feet 40, and we will have $2,400 left over to dollar cost average into anything that's currently red, which everything is currently red. So I mean, we got a lot of things to dollar cost average into. We got this chart right here, and you can see reinvestment allocation $2,700. This right here, everything changes. So if I simply say I'll make $4,000 next week, hit enter, and everything else changes. But yeah, it's a pretty neat interactive chart, and it tells us really quickly what we should be buying into. I do know we are in a lot of margin, and that's why I'm trying to slowly build out a safer position in the portfolio. Just think about it. This is about 20% right there into YMAX and YMAX, so these are safe. That's 20% right there, and this is another 20% right here. So 20%, 40%, and then you add in 7.5% towards margin payment. So half of every week and every month's distributions that I get will be going towards growing the portfolio in safer income funds, as well as paying down margin. That's why we aren't, 100% on X date and investing 100% of our distributions into the X day ETFs. We're trying to invest into safer things also, so our overall portfolio value goes up over time. Because these have lower, NAV erosion, then it should start dropping slowly. And once the market goes back up, it should start going up quicker than if I were to just buy all in Tesla, NVIDIA, Kony, and msty every week. And this comes down to risk tolerance, guys. Some people might reinvest all of their distributions back into YieldMax, but for me, I'm trying to diversify and also buy into safer things. Everyone has their own plan, and that's essentially my plan. So that's it for this main spreadsheet page. We got a couple more pages. So right here is our total return tracker. I want to be clear, this isn't version 1, this is version 2. Version 1, we came with the idea of typing in each individual lot, and real quick, literally after an hour of making this chart, I was like, yeah, there is no way we are going to track every individual lot. Here comes us hitting delete to this. So we spent a day doing that, and well, that just went down the drain. So we came up with this total return tracker with averages. If it's inside a yellow column, then it means we have to manually add in the numbers. But yeah, currently you can see these are our return right now, and we are slightly green on Tesla. msty, we are slightly green also. Everything else is red, but hopefully it gets better when our dividends start coming in. But yeah, this is how I track my total return on YieldMax funds. We can go to our distribution page, and every week when it's schedule A, B, C, or D on YieldMax on that date, I will look at all of the distributions I got on that date, and I'll put it into a new square. So next week is msty's week, meaning if I get $2,000 from msty, I'll plug in $2,000 right here. This will increase by 2,000, total income increases by 2,000, and this right here on the current distributions paid, taken from this number right here. And at the very end, we got our overall chart right here, which incorporates taxes. So assuming we're making $10,000 a month and we're living off of dividends, assume a 24% tax bracket. Margin interest is 6%, so $600 per month. But if we have paid the margin off, then we're going to add $600 to our net income right here. And we want to invest 22.5% every month no matter what, because it'll counter NAV erosion, and if there's no NAV erosion, then it means our income is going to be growing over time. Monthly income for compounding phase. So currently we are in the compounding phase. Taxes $0, and this is because we're not paying our taxes with our portfolio. This Robinhood portfolio right here, imagine it being a closed system. We aren't taking our dividends from this account and sending it over to our bank account to pay taxes. I'm currently using my 9 to 5 to pay my taxes. So yes, to those that say factor in your taxes, I'm using my 9 to 5 job to pay my taxes off on my Robinhood portfolio. And that's pretty much $2,400 per month I'm saving for taxes. I'm reinvesting 86.5% of my distributions, which is $8,600. We're paying 6% to margin interest, and you guys remember 7.5% towards paying the margin off. So that's how my portfolio is currently working. But yeah, guys, that's my portfolio currently. You know, it was a juicy distribution yesterday of $2,700 from YieldMax. I wish Kony was performing better. Hopefully the fund manager does better. Also, hopefully in 2025 that there's a Bitcoin reserve or something and Bitcoin goes to $100,000 plus again. Because we are heavy in msty and Kony. Especially Kony, we got like $30,000 in it. But yeah, that's my portfolio update video. You know, 72% margin. We are slowly getting towards 90% margin. We know the market is going to be volatile next week and probably until the end of January with Donald Trump coming into office, so we are trying to save our cash. We got $2,100 left in our allocations because we spent $500 of it already. We're not going to use this $2,100 until after the CPI inflation data comes out. Once the data comes out, if it's bad and the stock market goes down again, then we're going to start dollar cost averaging again with the $2,000 and possibly more margin, as you can see in this chart. But yeah, that's pretty much the plan for now, guys. If you made it this far, then thanks for watching. Hopefully you like and subscribe and share my video and share my channel.